Hello, everyone. Are you ready for episode 2 of the Gamma Experiment? I am. Let me start it off by sharing with you what we're doing here. I've already got a trade running, but we don't need to see it just yet. It'll still be there. I don't think any other trades are imminently about to fill. So let me explain what we're doing. Just about 3 weeks ago, market makers in the option market decided to start offering, and the options exchange, right? They all decided that they would offer options which expired on Monday, Wednesday, and Friday of every week. So before we had weekly options that always expired on Friday, but now we're getting options that expire 3 times during the week. I believe that that they have stated that they're going to do this every day, so that we're going to have options that expire every single day. And what that means is you have what is called zero DTE trading available every day. Zero DTE trading already dominates the option market. Most of the options that are traded out there are traded as zero DTE options. And what that means is the option is being bought and sold on the day that it expires. I mean, it sounds crazy if you're used to longer term kinds of situation. So why would you do that, right? Well, the answer is, as I'll show you in a minute, there's some really big opportunities. The opportunities are so attractive that a lot of people want to try to take advantage of them, but they don't know how. And because they don't know how, option sellers are like, this is gold mine for us. Let's just offer options all the time. But there isn't just one option market maker. It's not a monopoly. It's a highly competitive industry. And so the pricing tends to be just as low as it can go in order for them to attract buyers. This creates an incredible opportunity at the end of the day for people to buy something that rapidly appreciates. You don't have any guarantee that it wins, but when it wins, it could win bigger than the amount that you risk. That's kind of the idea. So the market's big gamble is that they're going to be able to sell enough of these options and not have to pay out. It's a gamble because they might be wrong. They might be selling stuff that costs less than the risk associated with it. Now, these guys got good math. Kind of like, a casino. You wouldn't expect a casino to kind of mess up the numbers of its own, of the game that they're offering, right? Same kind of situation here. But when I talk about gamma, understand this is what I mean. Gamma is a measure of the option price changes. It's one of the option Greeks. Higher gamma means more rapid change. Okay, that's the base of the idea. But there are 3 conditions where you could increase your opportunity for getting higher gamma. If you're trading closer to expiration, zero DTE. Also, if it's closer to the price, that's the at the money strike. And the third one is if it's happening later in the day. So the last 2 hours of the market. That's why we're here right now at the beginning of this window where we've opened up the possibility of making a trade that could potentially pay off a lot more than it cost. So if you have all of these things together, zero DTE, at the money strikes, last 2 hours of the day, there is extreme opportunity. There's some examples here, but I think I'm just going to go right to, I'll just let you know it's true for calls and puts. Rather than go with the explanation, let me just jump to my screen and show you the trade I've got on right now. What's interesting about this is that it is in prime position. If I hadn't opened this trade already, if I were just coming to it right now, I would still be interested in, considering whether or not this is a trade. And it's less expensive now than it was when I put it on. So here's the deal. I'm looking for opportunities where I think price is going to go a significant distance, more so than is priced in. Right here, you can see I've got this thing that's what I call the dead zone. It's sort of a heavy center. Prices are going to be attracted to it in these last 2 hours. So I feel like based on this, that I've got more opportunity. This is Amazon stock. Amazon has options which expire today. And I believe, whether my belief is accurate or not, that's totally a different matter. I believe that Amazon price is going to be pulled down during the last 2 hours. Maybe not huge. In fact, it's only $1.95 target. But I'm looking for a place where could it be that the price was stretched a little heavily. Well, we've already seen it. It ran up, it stopped right here. I'm using this red line. It's the Keltner channel. The settings for that Keltner channel, if you've watched me before, you know that I told you I was going to share them here today. Here they are. Length of 5, multiplier of 3. That's the important one. And the ATR length of 10. The larger you make this length, the more smooth they get. And I need this kind of short because I want these bumps. These bumps turn out to be pretty good predictors. Strange but true. Here's the situation. When you have price run up and then it runs down and then it runs back up again, then that creates this dynamic where you've got a red line that comes down, hits a low point, and then turns up. That lowest point right there, you see, is a place that's 3 ATRs away from wherever the price was at its lowest point. And so if for some reason it gets back up here, the potential for it to struggle, in other words, new sellers to enter in, buyers won't be able to push it up. See, if buyers were going to push it up here already, then they would have done that. It would have kept going higher. So if it comes up and it comes back, it tells you sellers met with buyers, you got some equilibrium. And then if from that point of equilibrium, you go 3 times the average true range, the average size of the candle over the past 10 candles or so, then you might run into opposition, buyers versus sellers, right? So buyers are moving it up, and then all of a sudden sellers are like, hey, this is a great price. Let's take advantage. And so that's the kind of dynamic I'm looking for. I'm looking for a place of vulnerability. This thing down here, this dead zone, gives me my target, $1.95. Wherever I start the trade, I'm looking to see if it will move $1.95. Now, that's nothing. $1.95, it's already been down here before. If it just comes back to its former low point, that's going to be a fantastic trade. I'm going to hit my target, and I'm going to make good profits from that. So how did I do it? Well, I bought a 215 put. It's the first put that was out of the money. The next strike price was 217.50. Let's clear up here. That one's in the money. I don't want that one. I want something that's so low in price that the move that's targeted is much bigger than what I'm paying. Well, as you can see, I got in back here on this candle for only 14 cents. If you were to get in the trade right now, you could actually get a price of 11 cents. So even a lower price than where I initially got in, just because, that time value has decayed over the course of about a half an hour. And so if in fact you got in the trade now, you could get in 11 cents for the contract. That's 100 shares. So it's $11. You could literally buy one contract for only $11. 10 contracts, $110, 20, 220, 100 contracts, $1,100. You get the idea. Just it can scale to whatever you need it to. And I would say even 100 contracts might be a little heavy for this option, but you could do it. You would be able to get it. It would take a little while for it to fill, and you'd have to take a little while for it to get out. That's something you got to factor in. But I think anything under 50, maybe 40 contracts is just going to go in, out like that. No problem. So I got in, like I said, at 14, and right now it's trading at 11. So I'm down 3 cents. If it goes to 0, I don't even care. I don't care, because that's only going to lose 14 cents or $14 times the number of contracts I put on here. And I've already, that's less than 1% of my account that I'm using for this experiment. So I'm totally good. I just, in fact, if it goes lower, if this price goes even higher, I might add to it with more contracts at a smaller price, because I haven't even hit the 1% risk on the amount that I purchased. So this is really easy because if in fact it comes all the way down to here, it's going to be worth a whole lot more than 14 cents. Let me give you an idea. When I first put the trade on, it was just above the line here, right about at the line. And by the time it made it to that second candle before I got on here, it was already at 21 cents, meaning I had a 50% profit. If I'd have gone in there and just sold my position, I would have made 50% on the amount that I was risking. Okay, that's not what I'm in here for, but that was fun just to see that sort of happen that quick. Now I'm watching, hoping that somewhere in the next 2 hours, this stuff is going to come down to this target level. We'll see. Maybe it's not going to work today, but I find that about half the time I get a trade where I can actually take some profit on these. I'll show you, in fact, the trades I've done over the past week. Now I'm going to show you all the other setups. I haven't got in any of these. We're going to go looking to see whether or not any of these have setups available. Here's Apple. This one happened a couple of hours ago. It happened so early on in the trading time that, I like to push later and later into the day because then the gamma goes higher and higher. But there was one with Apple, and in fact, it has met its target now. $2.05 target. I wasn't there at the computer. That would have been a good one to put on, and I could have even put it on here. That would have been even better. But either way, it met that $2.05 target. So Apple would have been a winner. I just missed that one. And Amazon, of course, that's the one I'm in. Tesla, just as we've been talking, it ran up and hit that and came back down. I missed this one too. Tesla has a $5 target today. So this is what it would look like. Had I bought this, I would buy the at the money put. That would be something like 406 or 405 put. And then the target is $5.51. That's a long target. Like if I had to choose between this and one of the others, I'd choose one of the others, right? That target is a long ways away. That being said, if it runs back up here and gets above that line, I'm going to be interested in trying to maybe see about making an entry on the trade. Google, I'm looking for 304.5 or so. If in fact price gets up above 304.5, then I could make a trade. But again, Google, huge target today, $5 target. I think that's a little too much. I mean, Google hasn't moved $5 all day. So this is probably one I'm going to pass on regardless. Microsoft, this one is very interesting to me. I'm really hoping it comes up there and I get a chance to short that one back to the downside. Meta, similar. I would love to see the price run up to there and short it. SPY, not quite there yet, but SPY is at 687.75 or so. If in fact the price crosses that, I'm going to buy that put option. The put option would be the 687 strike. IWM, IWM is getting closer. 262.55. So if in fact it crosses that line, I would be putting on the 262 put option, be buying that at whatever price I could get it for. Oh, and this one, luckily for me, it has not gone up and crossed that line. But this one is the closest, so I'm going to look at it and create the setup. It's only $1.39 target. So that's a small move predicted by the machine learning tool Edgefinder that I use. $1.39 is not very far. Something like that. And of course, I don't even bother putting a stop loss on because these things are usually that cheap. But this is almost in place. 612, almost 613. So this would either be the 612, or in this case, I might go the 613 because it's only $1.39 target. So I got to fire up and get my quotes going, see whether or not there's an opportunity for that QQQ. And I'm just going to look at what the QQQ 612 and 613 are trading for. It is getting close as we speak. There we go. Expiration will be for today. Strike price will be the 6. Let's price out the 6/12s first, because that's strictly speaking my strategy. Go with the first one out of the money. And this is a put and limit order. Okay, so right now it's priced at only 58 cents. The 6/12 is only 58 cents. I mean, I really like that, but it's only a $1.39 target. This thing has to get down to here in order to fulfill the target. If it takes the whole time to get down there, that's not even, enough to be past its pricing. If I buy it for 58 cents, then it's got to get below like right there, 611.41, in order to make sure that I'm going to be better than break even. Now, most of the time it'll do better than that anyway. But that's one of the considerations. When I have a situation like that, I might go and take the first one in the money, which would be, in this case, the 613. Let's see what the 613 is pricing out to be. Okay, so the 613 is $1 right now. So the break even, if I were to get in it when it gets up here, probably down to about 95 cents or so, then the break even price would be around here. See, as opposed to down here. So in other words, the target is going to take me past the break even price. So I might consider hitting the 613. This would be right now, it's priced at $1, $1. 99 by 101 is the bid ask. Oh, it just jumped up. So this thing jumped up to 103 by 104. May not get this opportunity if it keeps falling. Need that thing to keep just inching higher. And that's what I'm looking for. See, I'm looking for the opportunity to buy this thing, either the 612 or the 613. In fact, if it goes up and keeps going up a little, it would be above the 613, and then 613 would be out of the money. That would be my, perfect storm scenario. I'd want to get a price on an option like that, because then if it moves $1.39, it's almost guaranteed. No, it would be guaranteed to be worth more than I paid for it, which would, of course, mean that I'd have profit. But there's also a good chance that between now and the final hour, if it drops, then it would be more than double what I paid for it. So, looking for better than 100% gain on that. All right, looking back here, so Amazon's been up, but it is down under the number there. Apple kind of coming back up. Tesla, this one might be worth watching, because I might want to consider putting on Tesla if that one runs up. Let me price that one out and see what it would cost for me to do. The Tesla option, I gotta log into my brokerage account. I got two different brokerage accounts going here, because one of them I want to use for quotes and the other I want to use for the actual execution. You might say, yeah, Gordon, why don't you just get a broker that's good enough for both? Yeah. Fair comment. And if this experiment pans out, well, I'll probably end up doing that. For now, this is going to work just fine. All right, Tesla at 406 and change. We're going to look at the 406 strike, and the one that expires the 4th of March today. Okay, there isn't a 406. It's 405, 407.50, et cetera, et cetera. So 405 is the first one out of the money. It's only 53 cents. That's perfect. How's QQQ doing? Is QQQ? No, still not there. Closest one is Tesla. So if Tesla gets up above that line, then it would be a good trade. So I'm going to actually put in a limit order that assumes the price had made it up there. That's today's expiration. The strike is 405. And the type is a put. we're looking at a price of currently 56 cents. If it went all the way up there, that's probably going to be a price of below 50 cents, call it 49. So I'm going to put on a limit price of 49 cents and buy the right number of contracts. Okay, there we go. It's going higher. Yeah, just inch up a little more, baby. Okay. And perfect. All right. So what I've done is I've put in a 49-cent limit order for this particular trade. If in fact we see the price of Tesla get up above that line, very strong probability that the 405 at the money put will be, or first one out of the money put will be at the price I want, at that 49 cents or lower, in which case then I will fill and be in the trade. And then hoping that Tesla drops down to here. Now, if Tesla were to drop all the way down to 401, $5.51 target, right? If in fact it were to drop all that way, then, well, right now, the delta on that 405 put, the delta is negative 33. What that means is if Tesla drops by $1, then the option will increase in price 33 cents, right? However, gamma is so high, gamma on that one, on the 405, is 13 cents. So the next strike, it's only 6. The next strike in is 14, and the next strike lower is only 5. So there's this right at the money, gamma is really high. And what that means is $1 down, it's going to increase by 33 cents. But then you add 13 cents to that, 46 cents. The next dollar down is going to be 46 and so forth, right? It's going to accelerate rapidly. So much so that if I were to watch this thing move all the way down $5, I mean, I'd be kind of surprised if Tesla moved $5 this late in the day. But that's kind of the point, is that these options can do just that. So if in fact it did, or these stocks can do just that kind of a move. If in fact it did move $5, then I only paid 50 cents for it. By the time it got down here, it would probably be worth $3 or more in price. And so that'd be 6 times what I paid for it. And so the question of whether or not this is worth trading this way, well, now you got to kind of put together your statistics. Am I winning? How much of the time am I winning? Is it half the time or less, right? That kind of thing. Well, all right. This is why it's the Gamma experiment. I'm trading through this and trying to, give you an idea of what it looks like in real time, trading live money. Here are my statistics so far. The Amazon trade, I told you I put that on, but it's still running, so it's not completed. The previous 7 all happened since last week up until now. I put on 7 trades, and 3 of them were losers, 4 of them were winners. And you can see that the first ones, the first 5, they're sort of unremarkable. But then you get these last 2, and what are they? They're big winners. This one, see, I mean, I'm only risking because the $30,000 account, I want to risk less than $300 with each trade. And so far, my tactic has been to put on about 200, 250, and then have some space to add on if somehow the trade goes against me. But I think it's going to, snap back. And so in that case, I'll end up risking anywhere from around 300, 350, maybe a little more. On this one, you can see I risked 595. That was a bit of a mistake. I put on too big of a size there. But I did manage to get out with less of a, I didn't carry that to a total loss. I lost. I bought it for 85 and I sold it for 60, so I only lost $175. But from that, I learned, that should have been maybe only 5 contracts there. Anyway, where we are right now with the Amazon, see, I bought 15 of those, and my total risk was only 210. If this Amazon goes higher and the thing was only worth 5 cents, right, I might throw on another 10 contracts, and it's only $50 more. Or I could throw on 20, and it would only be $100 more. I'd still be at my $300 level, where I'm at about 1% risk of the trade. Okay, but my main point here is this. I had 2 very large winners. This one was double the amount I was risking. This one was 5.5 times the amount I risked. And so all told, this forwarded my $30,000 account by $30,500 by $1,500. So I'm up 5% on this just in 1 week. Wouldn't it be great? 5% every week. Well, that's why I'm experimenting here. I'm wondering, are these possible? Are these trades possibly that lucrative? Okay, just looking here. Tesla went up, but did not fill me at 49. I mean, maybe it's yet going to happen now that this 5-minute candle's headed back up. We shall see. In fact, I'm going to keep it right here. Keep an eye on this. But well, maybe not. QQQ, I got to check here. Oh, okay. No, it's not threatening to fill. I thought it was going to come up here, and if so, I wanted to put on a limit order for it too. Same thing with these others. Just checking around. Oh, just in the last 5 minutes, Meta spiked up, hit that. I missed that because I'm talking to you. But I've got to learn a way to sort of manage back and forth. But I'm not too worried about it, because this Tesla opportunity, and if I get the QQQ, I've already got Amazon. Amazon's going against me a little bit there. So, and then Apple, bummer I didn't get that one. So as you could see, there are 2 trades today that look like they would have worked out. Apple would have worked out if that trade had been put on. IWM. Yeah, IWM didn't hit here early on here, though. If it had put it on here at 262.77, 261, so that wouldn't be fully at its target, though. So maybe we have only one trade that's completely worked out. Meta is a trade that could have got filled, but we don't know if it's going to work out, right? This one looks like, had it filled, oof, boy, it's looking good, but still, just speculation at this point. Back to Tesla. That's one. Oh, Tesla's right here. There. In fact, it did just fill. So now I have 2 positions on, Tesla and Amazon. And going to wait and see how that works out. Now, part of the deal here is managing when you get out. If, in fact, you do get in, I got a couple of good entries here. I got Tesla where I wanted it at 49 cents, Amazon at 14 cents, right? So both of those are reasonably good fills. Tesla's got this big old target, and if in fact it starts getting into a selling mode, that could rapidly go down and could pay out big. But I've also got to decide, at what point do I just let these go to zero? And the answer is yes. I'm just going to let these go to zero if in fact that's all that happens, because it's just a trade. I don't win all of the trades, and I can afford. I didn't put on too much risk here. I can afford to let these both go to zero and live to trade another day. If in fact, however, it starts coming down, let's suppose the very next candle, just hypothetically, looks like this one over here. Big red waterfall, down we go. Doesn't make it all the way to my target, but it moves very dramatically. And now all of a sudden, that thing is more than 100%, maybe even pushing 200% of what I paid for it, in terms of profits. But it hasn't made its target. If it comes all the way down to the target, even, one big red candle all the way through, do I just, boom, hit it and take it? I might. But I found that what's even better to do is just move a stop, to right here or something. Put in a stop order so that if the price comes back, then I'll take the profit. But otherwise, let it go. Because what if it just drops all the way down to there, right? And if I sold it here and it dropped another $8, I would be really bummed out. But more important than that, when these things move strongly in your favor, you got to let them pay you all that they're going to pay you. That's part of the strategy. Okay, so that's the whole look of everything, and hopefully you get an idea of how it's done. As of right now, the Tesla trade has just jumped. It looks like it's about $12 in profitable. The Amazon trade is not profitable, and it's still gone up, but a lot of time left. We've got a whole nother hour and a half left before the markets close, so a lot can happen in there. This is the kind of this hour from 12 o'clock is my time, but 2 o'clock to 3 o'clock, still kind of a sleepy time. Prices really begin to accelerate. If they're going to accelerate, they begin to accelerate in the 3 o'clock hour, and in that final hour, and then in the final half hour, and in the final 15 minutes, they tend to move pretty hard. If they're going to, you get sleepy days where nothing happens all the way to the end, or they just keep drifting higher. Okay, if that's what's going to happen, I'm going to lose. I'm waiting for that situation where if in fact it drops, even by normal amounts, even if it just comes back down to here somewhere in the next hour, then this thing I paid only 49 cents for is going to be worth a lot more than 49 cents. And that's the whole premise of the Gamma experiment. If I have an edge, it's like me playing a coin flipping game with you. All right, let's say you're smarter than me, and I'm a little tipsy. We both walk into a bar, and I say, hey, let's play a coin flipping game. Gonna flip a coin, all fair. If it lands heads, you pay me $1. If it lands tails, I'll pay you $1.25. Just that right off the bat, you're like, what's the catch? What are you trying to pull here? That would be your response, wouldn't it? If somehow you came to the idea that I just didn't know what I was doing, wouldn't you be like, okay, how much money you got? How much time you got? How long can we do this? How much money can I make playing this silly coin flipping game with you, right? But if you thought that those are the numbers you were going to get on a persistent basis going forward, you'd want to jump in and take advantage of that, wouldn't you? That is exactly what we're doing here. I think that the market makers are just a little excited. They're just sort of, tipsy with the idea of collecting all those bid-ask spreads from crazy option buyers. And they're looking forward to making a bunch of money. And so they are laying it out there, giving you the opportunity to try. But what they don't know, what they aren't accurately pricing for, or maybe they are accurately pricing for it and they're just hoping that not too many people will take advantage, is that when stocks move a lot at the end of the last day of expiration, it can create situations where the trader can make more money than they risk. As we are sitting here right now, this thing's going in my favor. I am up $100 on my position. That's net profit. So I bought the thing at 49 cents. It's now trading at 81 cents. No, sorry, just blipped down 150 profit on the position. That's fluctuating. We'll see where it goes. I'm going to watch to see whether or not this makes it all the way down. But to be quite honest, I'm going to consider taking profits well before getting all the way down. The first place I'm going to take profit is if, in fact, I hit 98 cents. If the option price that I bought hits 98 cents, that'll be 100% gain on the position I bought. If I were to see another candle like this just pop right down, then I would have that. I would have that and a little more. At that point, I would start moving my stop loss up because I don't want to lose if I get a double, right, I don't want to give it back. And so that's kind of my personal strategy and how I'm going to manage getting out of there. So we were at 150 at the bottom of that candle. It's come back up. I'm at 100 right now. That's, profit on the position. I bought 4 of those contracts at 49 cents each to be just under $200. So I'm only risking $200, and the fact that I got $100 profit, that's 50% gain. So just in the time you watched me do this, like 5 to 10 minutes here, this thing made 50% gain. Now, some people might make a trading system out of that, just grabbing these 50%, get back in, do it again, over and over and over again. Good. Maybe that's even better. Like I said, this is an experiment. For now, I'm thinking that this methodology of waiting until you get double or better before you consider taking profits. Otherwise, maybe just letting it go. Or if you can tell, it's going to be a total loss, but it's not all the way, you haven't lost 100%, cut it a little early. That kind of thing, if somehow you could tell, you can't always tell. So I don't rely on that. I'm fully prepared mentally, emotionally to just let it go to zero. But if I get more than double, then I want it. That's how I get my $1.25 from this tipsy market maker. See what I'm talking about? Okay, I hope all of that explanation made sense to you. Let me see here. I'm going to do a around the horn again on these positions. Amazon went down, but then went back up. So I'm waiting. Got to see Amazon really break hard. Tesla, of course, we're winning. Loving that. Don't have an entry position. Boy, I'm bummed I missed that Meta because, had I made that trade, let's look at that. Let's just look and see. Coulda, woulda, shoulda, just for a little educational stuff here. What if I had if I wasn't talking so much and so long, what if I had created a situation where I said 285 right there, that's my target, and I got in when it was at 670, I would have bought a 670 option, and a 670 option, a 670 put on Meta at that point in time. Let's see how much it was going to go for. And then we'll compare that to what it's worth right now. Okay. Unfortunately, I don't have the ability to move my chart over and show you the prices. Give me a second here. There we go. All right. So that was just about 10 minutes ago when it spiked up there above 670 and 10 minutes ago. So that's 14:25 Eastern time. Okay. So it looks like I probably could have picked that option up for $1.50. That's how much it would have cost. Meta is a $600 stock and it moves around a bit, so its options cost more than 50 cents, right? So I could have bought this for about $1.50 or so, and I think that's being generous. I mean, the lowest I got was clear down to $1.30, so I couldn't have got $1.30. The spread is like 10, 15 cents at times, so at a minimum it'd be $1.50. Let's even call it $1.55. What could I sell it for right now? Well, it's trading for about $2.40 is the where the bid price would be. That's what I would. So I could have got in at $1.55, and then and $2.40. Not quite 90 cents. So it's not a 50%. I mean, it's not 100% move, right? But the target on Meta is really small. So if it were to go all the way down to that 285 target, then I wouldn't get a doubling on this particular trade. So I guess I'm not so bummed that I missed it. I want stuff that's going to go more than double. And in fact, I could hold this on and keep going. But anyway, just educational purposes, that's the kind of setup that I would have wanted to do. All right. IWM. Oh, IWM's getting close. QQQ turning around, but IWM's close. All right, so I need to go ahead and price my IWM setup. And I'm about running to the end of my time here, but you can see what I'm talking about. What I'm doing here is I'm going to go look and see 262.57. If in fact IWM trades above that, I'm going to put on a 257 put option. The price of the 257 put option is come on, fill the data. My Schwab Thinkorswim thing, Okay, here we go. 250, no, not 257. 262.57. So 262 would be the option of beginning. It's only 18 cents right now for a 262 put option on a $2.38 target. Yeah, so that's really easy. I'd be buying that thing for 18 cents. That's the kind of trade setup you can make. All right, well, I'm out of time here today, everybody. Hopefully that was both entertaining, informative, and a little bit of tutorial for you on how to do this gamma experiment. If you want to try it yourself, please connect with me if you think about it. Gordon Scott CMT is my handle on all the social media platforms where I am. Until then, everyone, take care and trade well.